Hey everybody, it's Maureen Lee, your local lender with Rate, here with this week's Mortgage Minute. Today is Wednesday, August 19th, around 9 a.m. So after several weeks of mortgage rates moving in the wrong direction, we finally got a little breathing room today, and the reason is pretty simple. So the Treasury announced that it is going to buy more of its longer-term government bonds, and when that happened this morning, well, our investors reacted positively. Bond prices moved higher and yields moved lower. And why do we care about that? Well, because when those longer term bonds move in the right direction, mortgage rates can actually benefit too. Now, before we get too excited, this doesn't mean that we're going to suddenly see 5% interest rates tomorrow, but it does give the mortgage market some relief after several weeks of this upward pressure. Now, there are some other things that are also working in our favor. Inflation has actually been well behaved. Last week's CPI showed core inflation falling to 2.5%, which is the lowest level we've seen since the beginning of 2021. Producer prices were also cooler than expected. And then there's the job market. ADP's latest numbers, well, they showed we were averaging only about 9,500 jobs that were being created week over week for the last 4 weeks. Now, that's showing us that the labor market is starting to soften. But what about housing? Well, pending home sales fell 2.3% in July and are now down 2.2% from a year ago. And we're seeing that slowdown show up in new construction too. Housing starts actually dropped a significant 12.4% from June to July, coming in very below expectations. And that sounds pretty negative, and it is, but there is one little bright spot. Building permits actually increased 5%. So fewer homes are being started, but builders are getting more permits. Well, this could mean that we're going to see a little more construction down the road. And builders themselves are telling us what's going on. The builder confidence, remains very low because they're dealing with higher mortgage rates, higher construction costs, and the economic uncertainty. So buyers are hesitant to buy and builders are hesitant to build. And that is one reason we continue to have this unusual housing market where demand is being held back by affordability, but we also don't have an oversupply of homes. Mortgage applications, well, they tell the same story. Purchase applications are down about 3% year over year, while refinance applications are down 18%. So what's the takeaway here? We're watching inflation, jobs, interest rates, and housing all point towards a market that is slowing down. But we're not at a point where I would say rates are suddenly headed dramatically lower. The good news is that the bond market got some help today, and now we just need to see if that improvement can stick. All right, everybody, that's it for this week's Mortgage Minute. Thanks for tuning in. Don't forget to like and share, and I'll see you next week.